In this video, traders, we're going to look at some of the main advantages of Forex trading. Stay tuned. Hey guys, a warm welcome to you. Right, thanks for tuning into the video. This channel is all about trading, Forex trading, spread betting, CFD trading, all the market strategies, mindset, the lot. So if you like this kind of video, you might want to consider subscribing, hitting that subscribe button and getting in the gang. Right, okay, so number one, the first thing is instant profits and losses and tax-free spread betting. What do I mean by that? So compared to other assets, you buy something, let's say you're buying a piece of real estate or buying a stock, you have to wait until you sell that until you get the profit. Not so with Forex. If you're buying a Forex position, say you're going long, the market goes up for a week, you can take those profits out. If you're trading via a spread bet, a CFD or spot, whatever you're trading, it's mark to market, so instantly the profit's available for you. And of course the loss is taken from your account straight away, so it's kind of double-edged, but that does mean that say if you're holding a position for a longer period of time, you could perhaps move your stop up and take the profits out of your account for something else up to that stop, for example. You don't have to wait until you liquidate the position, which is nice. And of course, if you're trading via a spread bet, then the tax-free status of spread betting is also handy. All right, number two, 24/5 trading across the world. So unlike the equity markets that open in the morning, close in the afternoon, Forex trades all the way through from Monday until Friday, or actually from Sunday night until Friday. So 24/5 trading, loads of opportunities. So it can fit in around your lifestyle. You know, if you're trading working nights, you can trade during the day for a little bit before you sleep. If you're working during the day, you can trade in the evening. You can swing trade. It could mean your stops and limits can be filled in the night time when they're resting there. Very, very convenient for that perspective. Number three, you've got hundreds of markets to choose from, perhaps even more than that. So there's so many currency pairs to choose from that there's always going to be something that suits your trading style. So you've got all the major pairs like Euro, US dollar, GBP, USD, JPY, going all the way down to kind of minors and exotic pairs, other countries crossing each other, crossing the US dollar. There's just so many to choose from. The spreads are slightly wider on the exotics, but still opportunities there, which means that you can kind of find something that fits your trading style. Number four, free charts and tools. Good thing about FX, guys, is free charts. You know, all the charting generally is free. If you find a website that's got charting, it's free. Like TradingView, for example. Many of the spread betting companies have got one in the description below if you want to check it out. That's all free as well, the charting. Now, they provide, other companies often provide free charts for equities and indices, but the thing is, because FX isn't regulated in such that it's not like the FTSE who charge a fee to have the FTSE feed, or the NYSE is going to charge you for those stock prices because it's their exchange. Because Forex is kind of lots of different markets, lots of different banks from interbanks trading with each other. The exchange rate isn't kind of a regulated thing. It's not constricted. There's no fee to pay, so it's free. So you can get FX data for free. Go to one of these charting platforms and you won't have to pay for it. Unlike equities, if you want real-time equities data, you have to pay the exchange for that. So that's handy. And loads of tools as well, because Forex is the most popular market out there to trade. Loads and loads of tools. Some are very, very inexpensive. Some are expensive, but the point is, because there's so many people trading Forex, you've got these tools and they're relatively inexpensive, if not free, and websites as well. Number five, very cheap to trade. So the spreads, probably in Forex, especially something like Euro, US dollar, are tightest spreads that you'll get compared to any other instrument. Just because, again, the amount of people trading it means that the companies can afford to have very tight spreads. Just a volume game, they're playing volume, tight spreads. Whereas if you look at some other instruments that aren't traded so heavily, the spreads are going to be wider because not many people trading them and they need to make their money from it. So great tight spreads, very, very cheap to trade. And that's why they feel spread betting. If you're CFD trading, again, same thing. If you're trading via a commission structure, commissions will be very, very low. You'll probably be able to trade at the interbank rate of a minimal spread plus a very small commission. All right, number six, good leverage. Good thing about Forex, of course, is that you can command or you can control, should I say, a big position size with a relatively small account. So that's what leverage means. You can control a couple hundred grand's worth of position with, let's say, £2,000. So very, very useful for that, which can come in handy. Double-edged sword though, that's, you've got to be careful, but generally speaking, used well, it's effective. Right, number seven. Profit from falling markets. Very easy to take the opposite side, check short side or long side. You're trading euro US dollar, for example, just as easy to take a long position as a short position. Short position being a position that takes advantage of a falling market. So if you think this exchange rate is going to fall between the pound and the US dollar, for example, you can speculate on that just as easily if you thought it was going to rise. So very, very simple to profit from a falling market in Forex. Number 8, no earnings gap risk. So unlike a stock or a share which releases earnings, releases information about the company, and then potentially the company going to open dramatically higher or dramatically lower, could cause you to have a pretty devastating loss if you're on the wrong end of that. You don't get that anything with currencies. You still get some news flow that comes out, economic news information that's scheduled. You can check that out. Again, it's one of the things that's free. You can see the economic calendar and see stuff that's coming out, for example, like jobs numbers in the US, interest rate announcements of their various countries, CPI, all these kind of little numbers that can affect the currency market. But you know, the currency markets are open when they come out, so it might move the currency, but it's not going to gap it. The only time you get a gap is if you get some sort of news over the weekend. So some sort of political news happens over the weekend that affects that currency, then you'll get the gap from Friday night to Sunday evening. So that's only time, but you get most of the week we don't get any gap risk, you just get movement risk based on news. Final thing, guys, number 9, lots of research and information. So because again, super popular, there's loads of research and information out there. Of course, you've got to be careful you're not taking in everything, but you can probably find some sort of information about how your currency pair trades, what's affecting the currency pair. Some currency pairs are called commodity currencies because they're affected by commodities. Some are more affected by, let's say, interest rates at the moment with the interest rate cycle. Some are more affected by geopolitical events. Some are affected by other countries, are very tightly correlated with other countries. So you can do that research and it's very free and very plentiful. And of course, with the internet, that's similar with a lot of things. Let's say, for example, you started to, I don't know, become a specialist in orange juice futures. You're not going to have anywhere near as much information because hardly anyone trades orange juice futures from a retail perspective. Whereas FX, plentiful, loads of information, easy to kind of get in, and a low barrier to entry as well, guys. Doesn't cost a lot to have a currency account open. You can have an account straight away. We've got one for you in the description below if you want to check that out, if you want to look and see a spread betting company. But any others will do. You know, you can open one, check them out, small amount of money, and you can get trading relatively quickly. Of course, it's risky, but if you understand the risks, then the rewards are there as well. You know, weigh up the odds. Okay, guys, take care. See you next one. Bye-bye.